Welcome back to another week in the markets. Today's the 31st of July, 2026. This is not financial advice. It's just an analysis of what's going on. Last week I was talking about how the 50 moving average was likely going to be a wall that we had to come back across in order for that to trend to continue back up. All week we stayed below the 50 moving average and the volume has been pretty steady, but honestly it's been decreasing, so that's not good, although the decrease is not very significant, at least for the SP500. If we look at the SPY, it decreased a little bit more, right? This is a very clear decrease in volume, although not significant. But usually when we're making a move towards the upside or the downside or whatever, you want to see increasing volume, kind of like what you see here from the 10th of July to the 17th of July, right? Very clear, like increase in volume, confirmation of the move, whatever direction it's going, and then here again, right, increase in volume, even more so. Let's see, let's try to find an even better. See, like right here, right, increase in volume. This is the Christmas holiday though, so it's not as bad, but in reverse is what we would like to see, right? Really drastic increase in volume. But the problem is we don't have that. And when the volume is decreasing, even if it's slight like this, that means there's still, like, it's still really not solid on which way we're headed. And so I'm pretty much approaching next week like, I don't know, it could go either up or down. And I know that's amazing analysis. The stock market could go up or down. But that's where we're at. So there's no real I mean, we're going to have to wait a couple of days. At this point, because we crossed the 50 moving average, now it's going to be acting as a level of support instead of resistance, which is what happened last week, right? So as I said in the last video, the 50 moving average, it could come up and then just reject from it. And that's exactly what it did, right? So basically next week, I'm about to draw some new lines on here, but we need to just keep an eye on that 50 moving average, because if we come back down below the 50 moving average, like, basically, this could be the retest, right? Because normally when a stock is doing something like this, right, if it's going to break out, it'll break out and then it'll retest and then it'll keep going. And so this little retest right here is very likely what we're doing, except it's upside down because we're going down, right? Or the trend is potentially going down. And that's a big problem, because if this is the retest, then next week we could continue going down. But again, I as I said in the last video, and maybe I won't draw this line here again. I'll actually just delete these lines here, because these are the daily time frame. I will not make weekly time frame lines again, because that hasn't changed. Let me double check. Yeah, this still is the swing high. We have technically another swing high here at the weekly time frame, I guess, but it's so small that I don't know if I would really want to count it. But let me just put another potential line of resistance here. Like I said, it's a tricky situation. We're in a transitioning market, as I like to call it. We just don't know what it's transitioning to. So that's going to be another green line of resistance here. And then as far as this, yeah, there's no real swing low here that I can take. So the best I can do is this one. So we'll just see. But yeah, okay. So basically, try to keep it as short as possible. This white line here is a monthly line of resistance, and we need to stay above that line, right? We're going to get a new candle for the monthly time frame. If I do monthly time frame, so monthly time frame, we're going to get a new candle, and it's going to be right here. It has to stay above the white line if the trend is going to continue. But that doesn't mean that we are going to just go up, right? It could just be a month of going sideways or even down. We could go down and just stick around the 7400s or even lower, right? Because remember, this right here, this little section is the breakout from the previous pattern, right? So as you can tell here, it came up, and I'll show you again a little bit farther back. So between these two yellow lines, or here, I'll make this one pink because there's another yellow line that matters, which is the one that's going up this way. But it doesn't matter as much yet because we have to confirm that that's another swing high. So we just need to wait. So I guess I'll just make this one yellow as well, just to keep it simple, because it's pretty complicated. So anyway, we start down here, make it all the way up here, and then we come back down. And this begins the pattern that we're in after a couple more months of solidifying the move up, right? Because I just look at the swing highs and the swing lows. That's really like where the market is moving in between. whatever pattern it's forming, right? That's where we're at. So, and I take two most recent ones. So I take this one and this one. That's why I'm kind of cutting that candle off. But anyway, once we were up here, this pattern, the two yellow lines, was pretty much confirmed. So then we started going up here, and again, we hit this yellow line, and then we're coming back down. But see, the move down this time was a lot shorter, right? Whereas here, it was like 4 or 5 months. Here, it's at least 1 or 2 months less. And then the move up was also much shorter, from here to here, and then we're going from here to here. But then we broke out, right? And so again, when you have the breakout, typically you have a retest of the previous line, which is now this yellow line. So as long as we stay above the yellow line, which for next month is pretty much 7,400, then we should be good. But realistically, I would like to see the next month go above 7,500 if the bullish trend is going to hold. Otherwise, we're going to be coming right back down into this area here in the lower 7,000s. And if that's the case, right, like if we close below the yellow line next month in September, that means that this trend is still in play. And in the last video, I said that if this trend is in play, the way the pattern works, it tends to break down. So we could potentially go into the 6,500s over the next few months, right? So there's still a lot of potential to the downside over the next few months. But the only way that we're going to keep going up is if we stay above the 7,400s. If we start seeing the market, and then again, this is monthly time frame. So in the weekly time frame, we'll take a look here in a second. But for the monthly candles, they have to stay above 7,400 or so, right? Maybe even 7,450, right? Pretty much 7,500, because that's the area right here. So now let's look at the weekly time frame. Same thing. The weekly time frame is being bounded by a certain movement, right, from here to here and to here. And putting a swing high up here is kind of challenging, but I just went with this one up here and then this one right here. So that's why we have this line. But this is also a rising wedge, which once again is a bearish pattern, right? So the interesting thing about this now is we have a rising wedge breakout at the monthly time frame, but see, this is that yellow line we have to stay above. So now we're a little bit zoomed in and we're right at the edge. But the problem here is, once again, we have a potential for a double top because this is two tops right here. Usually a double top is not good, right? Like the M pattern, it looks like an M, comes down, tries to go back up and fails, right? That is very much a potential here. That's why it's so hard to pinpoint what the market is doing right now and why there are so many possibilities and why this video is so complicated. But hey, that's why I'm looking at it every week, because right now we're like right at the end of things changing into another regime or market or whatever you want to call it. And that's why I got to pay attention to this. So even for the weekly time frame, the line that we want to stay above is the yellow line. So next week, we pretty much better stay above 74.30. If we start falling below 74.30, then that means we're back in this area, which I will mark right here, right? We're back in this area, and that's kind of like the danger zone, because if we start coming back down into this area, then the next two lines that are important is this yellow line and the green line. So pretty much 7,100, 7,150, right around here. If we continue going down and into this area, then we're really in trouble, because then we have two potentially confirmed breakdowns at the monthly time frame and the weekly time frame. And that would just mean that we really have a rough situation for the next few months. So that's very possible, right? So anyway, monthly time frame, weekly time frame, it's going to be hard to stay above because we have so much resistance to the upside. But if we do, then that'll be really good. And now let's look at the daily time frame, the one that's going to be the most important. So here, this one's really hard to put lines on, but I'm gonna do my best. So let's see what we can do. I can't even really count this as a swing. I mean, you could say it's a swing. Let's see what it looks like if we do that. Yeah, see, that's a broadening pattern, which I guess could mean that it's bearish, but that would mean that we have to come up to about 7,500 or so before we touch back down. So let me look at it from a different perspective, which takes this and this. But then again, from this perspective, we've already suffered the breakdown, which I guess kind of makes sense. Let's see. Because if I take this over here and look at that, it's almost exactly to where this candle. Let me remove my little triangles to make this super clean, or as clean as possible, I should say. Yeah, so, okay, so this actually kind of makes sense, right? So at the daily time frame, we were in a rising wedge, and we had the breakdown. The breakdown should have gone right around to here, which is pretty much exactly where it went to. And so now we could be in the recovery phase, but once again, we have to stay above the 50 moving average, right? So next week, the defining number is pretty much 7450 to 7500. But the problem is we've tried to go above 7500 for a while and we've been coming down. So if I would say we are able to make it above the white line here, which is about 7600 next week, then that's really bullish. But if we make it up to even 7600 and then we start coming back down, or even the green line here, which is about 7560 or so, right? If we come back down from 7560 right around here, basically where these two lines are. If we hit that and then we start coming back down, that's not good, because then we're going to be forming a new pattern. Then next week, for sure, we're going to have to take into consideration the move here. But based on what happened this week, I'm pretty much just going to treat this as the breakdown from the rising wedge at the daily time frame. And we're just going to see if the move continues up, which there is quite a bit of room, but we have to get past 7,500. We have to get past 7,500. And if we hold above 7,500, then we have a chance of getting up here. But once we get up here, we're going to see a lot of resistance for sure between 7,550 and 7,600. So, I mean, honestly, the way I see this playing out, and again, this is at this point, I guess, because there's so much conflicting information, I see us having a few days going up, right? Potentially, or even let's say one day we go up and then the next day we come back down. We're just hovering here, and then maybe we make it above and then we end up over here by the end of the week potentially. But then next week we come back down. That's a very realistic scenario. The other one is if we don't even make it past 7,500, then we're just coming back down. Pretty strong, I would say, too, right? So 7,500 is going to be the other thing, but for sure we have to stay above the 50, which most of the time the SP500 really wants to stay above the 50 moving average, which I also said in my last video. So yeah, that's pretty much going to be it. I mean, I think we have a tiny little bit of potential to go up into maybe the high 7,500s, mid 7,500s. But then as soon as we start hitting this green zone, which is, what is that? 70, what, man, there's so many, they're all close together. Yeah, 7560 or so. Then we should see a lot more resistance up here. But we'll see. We'll see. For now, Monday, 7,500 and stay above the 50 moving average. That's the goal. If we clear that Tuesday, Wednesday, Thursday, Friday even, we can slowly climb up. But yeah, we're pretty much going to be in this area this week, I think, based on the volume and all that, unless we just immediately go down on Monday. And if that's the case, then we have to come back down into this area below the yellow line here, which is about the 7,400s. Once we're in the 7,300s, if we're in this area, then the free fall really will begin, because we will have a few levels of support along the way, but it's like there's no major trend lines over here. So it's just going to be support and resistance along the way down. So we'll see. But yeah, I think for the next week, based on this, we should see just basically a tiny little move up and then maybe reject towards the end of the week if we even make it up there. So this is going to be my target zone for the next week based on all of this. Now, if you have learned anything, gotten anything out of the video, be sure to hit that like button. Really appreciate it. And let's go over to Bitcoin real quick, because Bitcoin is still surviving, but maybe not for long. Now, in the last video, once again, I had it on a bear flag, and as you can tell, it's broken out of that pattern, right? So the breakdown started, but it's kind of being held up there by the 50 moving average. With Bitcoin, if we start losing the 50 moving average, all right, it's pretty simple. We should see the downtrend start. And there's a very good chance that it'll be a pretty aggressive move towards the downside into the 50s, pretty straight and fast once and if and when that happens. But as long as we stay above the 50, I mean, I guess there's still hope, but I don't know, because Bitcoin already started the breakdown. But it's been a very slow breakdown, maybe because of the FOMC meeting, I don't know. we'll see. Next week is going to be very interesting for Bitcoin, but I mean, it already closed below the 50 today. So for Bitcoin, I think we're going to be in this region next week, which is anywhere from 62 to 58, just because of the pattern that it's been forming and the fact that it closed below the 50 today. The volume's been decreasing, but it's been going sideways. So again, who knows? So much conflicting information. But Bitcoin has been and continues to be on a bearish trend. I mean, if we look at the monthly time frame, you can see, right, we're forming that inverse cup and handle. So if over the next few months it goes up, that still doesn't mean that Bitcoin's going to go. I mean, for me personally, I totally see Bitcoin going down into the 30s over the long term, right? Maybe it doesn't, maybe it does. But based on the fact that this is a massive inverse cup and handle, that's very possible. Because even at the weekly time frame, we have a little cup and handle right here, right? And this is the handle. And so we're primed for a move down right now. Plus the fact that the RSI has some room to the downside. That's also good for the move, but bad for the price, if that even makes sense. And then at the daily time frame, we have our bear flag breakdown. And then, I mean, actually this one, you could say it's a cup and handle, depending on how you look at it. Right, this is the problem with technical analysis. But everything else, monthly and weekly time frame, is so bearish that it could move down. And the next level of support would be at 58,000 or so, which is where that red line is. So yeah, Bitcoin, let's see if it can stay above the 50 moving average. And if it can, then maybe it can keep going up. Because from here all the way to here would be kind of a cup and handle, right? Because this would be the handle. So if Bitcoin moves up, then I still am not keeping my hopes up, because remember, at the weekly time frame, we have the reverse, right? Inverse cup and handle, and the handle still has to form, right? And the way the handle is going to form is by Bitcoin going up. So even though Bitcoin's going up slowly, that doesn't mean that this pattern is invalidated, and especially not the monthly time frame, right? Like, who knows what could happen with Bitcoin. But to me, Bitcoin is not looking bullish at all in the near term. But this is obviously only from technical analysis. So who knows what other stuff might be laying out there for people to consume and make decisions off of. But as I said in the last video, I just buy Bitcoin every week, automated. I don't really worry about the price anymore. I just know what the future holds, and the future holds Bitcoin. So that's going to be it for today. Thanks for watching. If you enjoyed the video, be sure to hit the like button, subscribe if you want to see more of these videos, and let me know if you want me to make any videos on algorithmic trading, because again, I don't trade manually anymore. All of my trading is done algorithmically, which is pretty nice because I don't have to stare at the charts, other than the 1 hour or two that I stare at them while making this analysis, because I need to make the analysis so that at least I have somewhat of an idea of what to expect in the near future, right? Because that's the only way that you can make better algorithms, is by actually being in the market and understanding how it moves and what might happen in the future and all of that stuff. So that's kind of why I'm doing it. And also I figured if I'm going to be doing these, I might as well just share them online. So anyway, I'll see you in the next video.